momentum, volume, price action, and where price is trading, because I look for specific price action signals at specific levels where I see that there's a lot of buying and selling pressure, right? Because if I see that price has broken above an area of resistance where I saw previously, again, if you look left, structure will always leave some form of clues for you to base your next trade off of, right? If I see that price is broken above that level and has made new highs, what's the probability of price coming back down to test that area that it's tried so hard to break out of? I would say it's fairly high. So I'm going to wait for price to come back down to that level and look for any signs of momentum slowing down, for volume to slow down, and for that, maybe even that price action signal, depending how aggressive I want to take the trade. And again, depending on how aggressive I want to take the trade will determine, will be based off of the probability that the trade is going to go in my favor, right? So for me to continue to hold the trade, really, it all depends on price action, and it all depends on momentum and timing. Timing is also super important as well. If I see that we're already near the end of the session and price is starting to slow down, doesn't really look like it'll continue, right? Then I may close the position depending on, the risk to reward ratio that I'm up. Because if I'm break even, I'm going to continue to hold my position to the next session, right? Because again, the trade is still valid until my stop loss gets hit. My stop loss is placed in a specific area where if price hits that stop loss, and the trade is no longer valid because price is completely going against me, right? And it's starting to break all my areas where I confirm that, hey, if we stay above this area, then we're most likely going to continue to travel up. Versus if we break under this area, the probability is a lot higher for price to continue to go down versus come back up and go in my direction, which that's another thing that people struggle to do is, once they take the trade, they tend to adjust stop losses. Now, initially, if you take a trade and you adjust your stop loss because you notice it wasn't in the right area to begin with, that's fine. But when you start modifying the stop loss again and again and again and again, and you're just lowering your position more and more and more, praying that the trade will come back into your favor and continuing to go in your favor, it's a very gambler type of mindset, and you're kind of just hoping at that point that the trade will recover, when again, price doesn't give a shit. The market doesn't care who you are. On the contrary, it wants to take your money.
Swing trading is a different set of skills. So you have to ask yourself, is the market going to reverse? Is it not going to reverse? Could you speak on that?
Yeah, well, I mean, like my first question that I always ask myself, I mean, you can literally check it out on my YouTube. Like it's always there because I always write down the confluence whenever I take down the trade. The first thing is, what is the market doing? Are all time frames in sync? Is the weekly, daily, 4 hour, are they in sync? If they're not in sync, then everything after that doesn't make any sense. So if the market is not in sync, I'm not even going to take the trade. The second thing that I ask myself, is this trade worth the risk? Am I risking $1 to gain a minimum of 2? That's, your basic trade setup. Following with what Raul said, is that trade at an area where if it breaks the level, I am completely wrong, and then I react and adapt to what the market shows me. And it's, let's say I'm buying at a support level, and then the daily has completely engulfed under that level. I'm no longer looking for buys. I simply wait for the daily to come back, retest that previous structure, use it as resistance, and then short the downside. So it's just simply, is this at an area where it is going to continue bullish, or if it goes against me, I am 100% wrong, and then I simply change my bias to bearish. I'm not stuck on one bias. I don't want to only go long. I don't give a shit. I want to make money, and if the trade makes sense, buying at this area, great. If I was wrong, then I simply wait for the lower high, and then the trade now makes sense to sell. I'm not in the business to be right. I'm in the business to make money. So definitely one of the questions would be, are all my time frames in sync? Is the trade worth the risk to reward? Am I buying at a level where if I am wrong, I am completely wrong, and I change my bias 100%? I buy at a support level. If I get a 4 hour daily bearish engulfing, I literally wait for the next lower high, and now I short it because now the trend has changed, whether it be on the 4 hour or the daily. And then the next question I would ask myself, is this trade worth, or is this trade going to give me my 2.5% a week? If this trade is not going to give me my 2.5% a week, I don't take it. There's just simply no need, because I'm not trying to force a trader. I'm not trying to be right, or I'm not trying to be involved. I'm only going to take a trade if it's going to give me that 2.5% a week. So I get my 10% a month, and then I do what I keep doing. So it's just really comes down to that. That's probably one of the biggest, what are all the time frames in sync, and then is this trade going to give me that 2.5?